I'm going to take a whistle-stop tour through what's been going on in my portfolio over the last month. But before I even go there, there's been lots of things that have been creating lots of volatility in the markets. First of all, we have the US election where Trump has managed to get in for a second term, but also you have the Republicans who have managed to take over both the Senate and control of the House. On top of that, you've had the Bank of England providing a 25 basis points reduction in interest rates, coming down to 4.75, and crypto pumping all over the place, with Bitcoin hitting all-time highs, as well as lots of the smaller coins popping off, things like Kronos going up almost 100% in a day. Things are getting a little bit crazy, lots of fear and greed. Let's see whether this continues for the next 4 years or not. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Talking about what has been going on in the wider geopolitical world, you would expect my portfolio to have completely and utterly exploded. If you have a quick look at this, you will see that that is not the case. Over the last 3 months, it's just been a little bit of a steady increase, and actually it can't figure out what it's been up to over the last month. All in all, account value just under the 45,000 mark, and that just keeps bouncing up and down. I keep breaking through that and then falling back down, and I have a little bit both reserved for orders and a small amount of money in there as free funds. Within the cash ISA, still have about £10,600, and what you will see is that for the cash ISA and interest rates on your uninvested money within Trading212, they are providing 5.17% interest on your savings. On Trading212 app, and actually I think on the desktop version, you have this really nice way of showing your allocation. So this gives you a quick snapshot of how things are doing. So you will see that lots of my portfolio is currently red at the moment. If you click on more details, it takes you through and sort of shows you all your different assets. Largest position that I do hold is 18% of this account is the S&P 500, and that just sits within one of my own The World pies. Not that far behind that, you have Realty Income, which is my largest individual stock holding. And as you can see, this was up quite substantially more earlier on in the month, peaking out at about $64 per share. Still holding 170 shares of this. I'm paying a nice little dividend of 5.41%. And don't forget, this is the monthly dividend payer, so I get about £30 per month coming in as dividends. Over the last month, 6 weeks, what have I been buying? So I've bought in a bit to Legal & General and Greencoat UK Wind, UKW, and that comes up with it goes ex-dividend on the 14th of November. So I've bought 75 and 125 more shares of that. I've also added to Vistry Group, and I've bought this on a number of points over the last 6 weeks. So last week I added 50 shares of this, and also back in early October I added an additional 40 shares of Vistry. It has had a profit warning, but while it's coming in at this price point, I went, what a great opportunity to buy into one of those UK house builders that should hopefully benefit from all the hard work that is needed to meet that huge 1.5 million new homes over the next 5 years. Then added another 125 shares of Legal & General while it was coming in quite cheap earlier on in the month. And then with some of the dividends that I got from the first dividend payment of the month, I bought an extra almost 8 shares of JP Morgan's Global and Growth Income Investment Fund. BP, couple of purchases this month, coming in an extra 175 shares of BP. This is a new holding for me. Bought into this because the price of oil has been coming down and down, and I think somewhere in around $70 per barrel was the price. I actually sold Quanex Building Products, which was one that I'd got shares from one of buying out Tyneham earlier on in the year. I just sold that out to reuse some of the money. And while SML was actually down, I've added an additional 0.7 shares to there. I'd already bought into UK, and I've also added to my renewable infrastructure group holdings with an additional 200 shares of that being bought. So who's doing well and who isn't doing quite so well within the portfolio? I'll leave it up to you to guess who's done the best, because they've been doing the best for a past number of months, but there are a number of companies not doing quite so well. Evolution Gaming just bouncing in around that, almost 20% down. I'm going to wait and have a look and see what I should do with this. Persimmon is down quite substantially over the last few days, and that is only a very small holding within the UK house builders. Potentially something that I might look at adding a little bit to, as it is dropping down quite considerably on that share price and getting down close towards its 52-week low. And then my third worst performing stock is Glencore. Glencore being very cyclical here as usual, and I own just over £400 worth of this in those 110 shares, and it is paying a smaller than normal dividend yield of only 2.67. Lots of the miners very, very cyclical, and when they are doing really well they will pay out humongous dividends, but when things aren't going quite so well they do cut them. So if you are looking at building miners into your dividend income strategy, you need to just be aware that you may need to bear in mind there will be certain periods of time and certain years where they may not pay out quite as well as you might hope. And then looking at those companies that have done reasonably well, we have IG Group is up almost 41%. That is paying a tidy little dividend of just over 5% and showing great momentum on that chart. We've gone into a little bit of consolidation over the past few weeks, but let's wait and see where that goes to. Intermediate Capital Group once again is up close to its all-time highs for the last year, and I only hold 20 shares of this, and this is one of those that I wish I had bought a little bit more into, but I just kept missing the entry point for this one. So got in at about £12.84 per share, and that is up tidily at 22.55. This one is paying a dividend yield now of only 3.5%. When I initially bought in, it was much closer to the 6% mark. And then, hardly surprising, Rolls-Royce still on that momentum climb over the last year. Just over 100 shares of this, and doesn't everybody wish they had bought in a little bit more into their Rolls-Royce holdings when they were nice and cheap? Still waiting to see what is going on with the dividend yield on this one, hoping that they are going to start paying one in the near future. All we need is them to get the contract for the small modular reactors in the UK, and this would see potentially getting a £10 per share. I use Stockopedia to go away and do some research before I make some of the purchases that you've seen, and what they are doing is they've offered me a great opportunity for you as watchers of this channel to get a bonus discount during the Black Friday. Well, it's actually Black November that they're going to call it. So if you want to use the link that I have down below, you could get 30% off signing up to any annual plan, and all you need to do is just use my coupon of DSFI30 when you get the checkout, and you get 30% off the value of your annual plan. If stock picking isn't what you're up to and you're more interested in ETFs, I'll leave a link down below where you can get your hands on my ETF cheat sheet, or you could go and have a quick look at one of these videos where I talk about lots of different ETFs that you could potentially buy into. Thanks very much for watching. I will see you in the next one. Cheers. Bye.